Everyone, Jennifer from The Profitable Agent joining you today. What if I told you that you could pay yourself the same amount every single month, regardless of when your next deal closes? Whether it's your first year in the game, your 50th year in the game, it doesn't matter. There's not to hope for it, not to aim for it, but actually build a system where that's actually how it works. Because that's what I want to walk you through today. A practical, simple system that takes the unpredictability out of your income without requiring you to actually earn one single dollar more. You don't have to work harder or wait for the market to cooperate. If the feast and famine cycle has been your normal for as long as you can remember, I want you to know that it doesn't have to be. And by the end of this video, you're going to understand exactly why. Before we can talk about the solution, let's talk about the problem as to why this exists in the first place. Most realtors operate from a single bank account. I know I was just at a brokerage yesterday, and more than half the hands in the audience went up when I asked how many bank accounts people had. And of course, most of them just got to one. Commission comes in, it goes in the account, expenses come out, they leave the account. Personal spending also happens from the same account. Taxes get paid from the same account as well, and what's left over usually ends up being the paycheck. The problem with that model is that it treats every dollar the same. There's no separation between what's yours personally, what belongs to the business, and what needs to be set aside for tax season. It all lives in one place and it all feels available. So when a big commission hits, things feel great. Spending goes up, life feels good, and then a slow month hits, and suddenly the account that felt full is looking very different. It's not bad luck. That's the inevitable result of a system that wasn't designed to handle a regular income. The roller coaster isn't caused by the market, it's caused by the absence of the system. Here's the system I absolutely love to use in my business. I walk realtors through this setup all the time. It has only 4 steps and it works regardless of how much you earn or how consistent your deal flow is. Step number 1 is to separate your money. Open a dedicated business operating account if you don't already have one, and all the commissions go in there first. This is not your personal account, guys. This is where your business income lands and gets allocated before anything moves, okay? Step number 2 is set aside your allocation percentages. Remember, we have the Profit First books, okay? So if you need your benchmarks, go there or go to the profitableagent.ca. You can find lots of training and workthroughs and downloads, and we show you where to find those numbers. So whether it's your first year in real estate and you're maybe at 50,000, or maybe it's your 20th year in real estate and you're hitting 500,000, whatever that looks like for you, there's income levels and percentages at every single level, whether you're 0 or $50 million in the game. So step number 2 is, again, set those allocation percentages. Every time a commission hits your business account, you allocate it into categories before you spend a single dollar. I also like to call this my buckets. Okay, guys, we've got our buckets full of money here. You can see your wonderful money. A percentage is for profit, a percentage for taxes, a percentage for operating expenses, and a percentage for your owner's pay, the amount that transfers to your personal account. The specific percentages depend on your income and your expenses, but the principle is the same for every realtor. Allocate first, spend second. Step number 3 is set your owner's pay amount. Again, you can find this at our website, theprofitableagent.ca, or if you have the Profit First book by Mike Michalowicz, you can also find those charts and income levels in there. This is the number that transfers to your personal account on a regular schedule. Weekly, bi-weekly, whatever works best for you. I know I do mine every Friday because I love moving whatever money I have around in those accounts. It's based on your allocation, not on whether a deal closed this week or not, okay? So choose a regular allocation period that works for you. This is the number that ends the roller coaster. I want to say that again. This is the number that ends that roller coaster. Because your personal life is no longer tied to your deal flow, the business absorbs the highs and lows, and your personal income stays steady. Step number 4 is to build your buffer. The first goal of this system is to build enough of a buffer in your business account that your owner's pay never misses. That buffer is what funds the slow months. It's what makes a quiet January feel manageable instead of terrifying. Building that buffer takes time, but once it's there, the roller coaster is over. Your personal income should be decided by your system, not your deal flow. I want to talk about what actually changes when a realtor sets this up because it goes beyond the numbers. The most immediate thing is actually your stress. When your personal income is predictable, a slow month stops feeling like a crisis. You're not watching your account the same way. You're not making desperate decisions from a place of scarcity. The second thing that changes is your clarity. When your money is separated and allocated, you actually see what's happening in your business. You know what you're keeping, you know what you're spending, you know what's sitting for taxes. Nothing is hidden inside one account, hoping it all works out, okay? And the third thing, and this is the one that surprises realtors the most, is performance. When financial stress goes down, focus goes up. That mental energy that was quietly consumed by money anxiety gets redirected into the business, into clients, into actual growth. Financial structure isn't just a money strategy, it's a performance strategy. When your income is predictable, your decisions stop being reactive, and that honestly changes everything. 4 steps: separate your money, set aside your allocations, set your owner's pay, and build your buffer. That's the system. It's not complicated, but it does have to be intentional and it does have to be set up. The realtors that I've worked with who I've seen do this tell me the same thing every time. They can't believe they operated the other way as long as they did. And I'm guilty of that too, guys. I was at a point 6 years ago where I would throw what felt like every single available dollar I had on my credit card, but somehow my balance just kept getting higher and higher and higher every single month. I absolutely made the mistake of paying off my taxes and my credit card and forgetting about paying myself and my staff. So then what did I have to do? I had to go onto a line of credit and take a cash advance from my line of credit to be able to pay payroll. This system is not magic. It's the alternative. The alternative to have one bank account is so much harder than what it needs to be. You don't have to keep riding the roller coaster. You just have to decide when you are done with it. If you want help setting this up for your specific situation, that's exactly what a clarity call is for. A free 30-minute call that will actually look at your numbers, figure out where your allocation should be, and map out what your next 60 days should actually look like so that you can get off that roller coaster for good. The link is in the description. Grab a spot. I'd love to help you guys build this. And if this was useful, please share this with a realtor you know, because I promise you, they're on that roller coaster too, and they are ready to get off. Thank you guys so much for joining me today. Jennifer from The Profitable Agent out.